Hello and welcome to Siddhyati CBSE lectures. In today's video, we will be discussing about how to handle workman compensation reserve and workman compensation claim if they get asked in admission and retirement chapter. You have to know very clearly that the whatever that we are going to discuss are only with respect to admission and retirement chapter, and in very rare cases death of a partner chapter as well. But whatever that we are going to teach and you are going to learn in this video will not apply for dissolution chapter. So on that note, let us quickly see what are we going to discuss in this video. First, we will see what are the ledgers that are going to be handled in this lecture, and we will also know what is workman compensation reserve and why it is created in the first place. And then I will give you five different scenarios, and we will discuss in detail what will be the journal entries that will be applicable for each and every scenario. And also I will teach you how to do the ledger posting for each and every scenario and the balance sheet disclosure. So on that note, let us have a very clear idea of what are all the ledgers that are going to be there in this lecture. Okay, list of ledgers. The first ledger that we are going to discuss is the workman compensation reserve account. The second ledger that we are going to talk about is workman compensation claim account or claim payable account. This is the second ledger. The third ledger that we will deal here is partners capital account. And the fourth ledger that we will deal here is revaluation account. So have a look at it. These are the four ledgers that we are going to talk about in this video. Again and again, these ledgers will come in one place or the other. So have a good look at it. Okay. Now let us understand the nature of each and every ledger. Reserve account, the nature is an accumulated profit or it is a gain account. The nature is an accumulated profit or gain account. And because this is a gain account, the natural orientation of this ledger is credit side. Every ledger will have a natural orientation, isn't it? So if it is an asset, it has debit side, liability credit side, expense debit side, income credit side, and then capital credit side. So this is a gain account. So in a way, this is like an income account, accumulated income account. Therefore, it goes to the credit side. Second, workman claim payable. Now the word itself has the word payable. The ledger itself has the word payable. We have this as a liability account. And because this is a liability account, it will also have a natural side of credit. Okay, next, partners capital account. The name itself tells you what type of account it is. It is capital account by nature. Therefore, capital account also has the natural orientation to be credit side. Finally, revaluation account is nothing but a substitution of P&L account. P&L account can be debit side, can be credit side. It depends ultimately on what is the items that are getting posted in that account. If it is an income entry or if it is an expense entry, depending on that, the side will take. But if it is not, if nothing is said about it, we will assume it to be an income type account itself, and therefore I will call it as credit side, credit based account. Now if you see, all the four ledgers that we are going to deal today all have a natural orientation of credit side. Okay, so with that note, now we will go to the second topic of today's video, which is what is workman compensation reserve, why is it created in the first place. What is workman compensation reserve and why it is created in the first place? Now we have to understand, firms do business. Sometimes the business can be heavy manufacturing, they will be dealing with some heavy engineering equipment. Factories usually take a lot of precautions to ensure the safety of the people who work there. Despite all the safety measures, sometimes some incidents will happen. A factory labor might carry some heavy equipment or carry some heavy tool, some sharp object, and he will drop the tool on his finger and it might bleed him. Let's say a portion of his finger might also be cut. So you imagine, it can go, a toe might be cut. Sometimes even the employee might die. The worker might even die. We have seen in a lot of movies, isn't it? A worker, working in a high-rise building might fall from the place because the harness might not be fastened properly. Any number of reasons why a worker might get injured or a worker might be dead in a workplace setting, in a factory-based setting. So such a situation happens, the company or the firm will be liable to pay a huge amount of compensation to the victim, which is the worker, either to the worker directly or to the family of the worker. Sometimes the worker might still be alive, but he might have a permanent disability, therefore he might not be able to work anywhere else. So when such a situation happens, when a firm has to pay a huge amount of compensation to the employee, to the worker, it is a huge liability for the firm. And usually in such a scenarios, the victim should immediately get compensation. The firm cannot say that, okay, I will pay you the money, but just wait for a couple of years. We are currently shortage of funds. We will pay you in like 5 installments, 6 installments. We cannot talk to an injured worker like how we talk to a lender. So the severity of the situation also you have to understand. So firms foresee such type of situations. So it is like taking insurance. So we can't say that when we will have a problem, so that time I will go and take insurance. We don't know when the risk is going to happen. So that's why we take insurance in advance. Therefore, firms create right during their bright years, whenever they have some surplus profits. In their good years, they anticipate the problems that might come in the future and create reserve in advance, well in advance. So that reserve is called the Workmen Compensation Reserve. In future, I might land up in trouble. So in that trouble situation, I should not be, tapping the doors of the bank to ask, give me a loan. Banks might not give you a loan in an emergency situation, or banks might charge you some exorbitant amount of interest, which is not so financially positive for you. So to avoid all these embarrassing situations, awkward financial situations, firm create this Workman Compensation Reserve. It is a reserve like we saw here. It is a type of reserve that you have to keep in mind. Firms create these reserve amounts during their bright years to safeguard themselves from not having some during their lean years, okay, during this type of awkward financial situations. Okay, on that note, let us go to the third segment of this video, which is we will see what are all the 5 different scenarios, and we will see the journal entries for those 5 different scenarios. Third segment of the video, 5 different scenarios. So this is the core examination point of view that we have got into. Okay, 5 different scenarios. Okay, scenario number 1, scenario number, this is the reserve amount and this is the claim amount. In question, you can expect 5 different scenarios. Anything can be asked from among this 5. So scenario number 1, reserve amount. Let's say the firm had 50,000 rupees of reserve and there was actually luckily no claim to the firm, no claim against the firm. So nothing happened to the workers, everything is going fine. So no need to panic, nothing happened. Scenario number 2. The firm had a reserve savings of 50,000, but the firm had a claim against it 10,000 rupees. This is the second scenario. Third scenario, the firm has a reserve amount of 50,000. The firm had a claim amount also for 50,000. Fourth scenario, the firm has a reserve amount of 50,000, but unfortunately the claim amount turned out to be a huge one. The reserve amount, whatever the firm had saved, was not enough. The claim turned out to be 70,000. And fifth scenario, the firm did not even anticipate all these things. The firm had been really careless and they did not have any reserve amount, but they ended up having a claim of 20,000 rupees during the year. These are the 5 different scenarios. Now let us see the journal entry for each and every scenarios. Now let me take you to this segment of the list of ledgers. We saw 4 ledgers. Beyond this, no ledger, new ledger will come in this whatever 5 journal entries. Here you have workman compensation reserve, workman claim payable, and then partners capital account, and then revaluation account. In every journal entry, minimum workman claim payable will definitely come. The second most number of journal entries, workman reserve, will come. Partners capital and revaluation account, it will come based on the situation. How it will come, where it will come, we will see. Now, let me go to the first scenario. You should understand a pattern. By the time we see 2 to 3 scenarios, you will know how the journal entries will be designed. But just stay around. Let me write the journal entry for the first scenario. First scenario is where the reserve is 50,000 rupees, but there is no claim amount. How to write journal entry for this? You have to, whenever the balance sheet has reserve, see, you will not be given a question like this, a tabular column of reserve is 50, claim is 0, now write workman reserve. No. This will be in a 6-mark question. This will be in the balance sheet, in the old balance sheet. The question will come with a balance sheet, isn't it? So this will be given in the balance sheet and claim will be given in the adjustment. So you have to look, when you read the question, you have to look at these 2 specific places. So when you look at the balance sheet and when the old balance sheet has an amount of 50,000 in the reserve, what you have to do? The first thing you have to do when you see such type of entry is you have to debit workman claim, workman compensation, reserve account. Every time you see a reserve amount in the balance sheet, the journal entry has to be workman compensation account, workman compensation reserve account, debit, standard. Whatever the number you see here, you have to bring that to the journal entry. So this is a constant entry in all the 4 subsequent entries for scenario 1, 2, 3, 4. For all the subsequent scenarios, you will see a constant workman compensation reserve debit. To recap, we are currently learning the journal entries for admission chapter or retirement chapter. In either case, the firm is going to reorganize. In that situation, whatever the reserves that are left within the firm should be dismantled, and either they should be used for the purpose they are created, in this case to give it to the workman as a compensation, or it should be distributed to the partners themselves, because ultimately it's a gain amount, it's an accumulated profit amount. To whom does the accumulated profit belong to? It belongs to the partners, so it should be distributed to the partners themselves. So in this case, let us imagine the firm has 2 partners, partner A and partner B, and let us imagine that they have equal profit sharing ratio. The firm has 2 partners, A and B, and the profit sharing ratio is 1. And you don't worry about whether it is admission or retirement, so you don't worry about what if the new person comes in or what if the old person retires. You should always look at only the old profit sharing ratio. In case it is a retirement question, then the question might be like, A is to B is to C, and let us imagine the profit sharing ratio is 1 is to 1, 1 is to 1. So in that scenario, you should divide the entire thing also as per the OPSR 1 is to 1 is to 1. But for our discussion, today's discussion, I'm going to treat only admission scenario. So let's say there were two partners, a new partner is coming, but the old partners shared between them the profit in the ratio of 1 is to 1. Okay, on that note, let me complete this journal entry. I said that the starting point is going to be workman compensation reserve account debit. The claim is 0 in this case, which means there is no workman compensation claim. Luckily, nothing happened. So we have decided to distribute this 50,000 to partners A and B in their old profit sharing ratio itself. So the journal entry will be workman compensation reserve account debit to A's capital account and then to B's capital account. The profit sharing ratio is 25%, 10%, 1 is to 1. The profit sharing ratio is 1 is to 1, therefore so each of them will take 50% of the reserve. So this is the first journal entry. The second journal entry is where the reserve amount is 50,000 and the claim amount is 10,000. So whatever we have done here, workman compensation reserve account 50,000 debit, that will exactly be here workman compensation reserve account debit. That is not going to be changed at all. So now we will write 50,000 we have debited. We have demolished whatever be the reserve that was left. We have demolished that by debiting it. Now claim is there for 10,000, isn't it? So we have to give a claim. We have to give credit to a liability called workman claim payable. This is where we are recognizing the fact that okay, an employee and a worker got injured, we have to pay him 10,000. So let us give the amount of 10,000 as a liability to him. Let us create that amount as a liability as of now. So we have created a liability. Now debit has 50,000, credit has only 10,000. Where will the baki 40,000, where will the last left 40,000 go? It will go to partners only, because I anticipated a loss of 50,000 and I created a savings of 50,000, but I ended up having only how much? A debit of, but I ended up having only a liability of 10,000. So I just gave it as a credit in the name of liability. And then the balance 40,000 unutilized will still be in reserve only, right? So it cannot be in reserve because we are carrying out an admission process. So that has to be demolished. So again, it should go where? It should go to partners capital account. So in this case, A and B will be credited. Again, A and B will be credited to A's capital and to B's capital. The balance amount is 40,000. So out of that 40,000, 20,000 will go to A's capital. The balance 20,000 will go to B's capital. So this is the second journal entry. A's capital account, B's capital account, 20,000, 20,000. Just take a look at it. This is the second scenario. Reserve of 50,000. Reserve got nullified. We created a claim here. A liability has been created. And then balance reserve given to the partners, distributed to the partners. Okay, so on that note, let us go to the third scenario. The third scenario is where reserve amount is also 50,000, claim is also 50,000. Reserve amount is also 50,000, claim is also 50,000. That means whatever I predicted and kept as savings in the name of workman reserve, to that same extent, I incidentally ended up having a liability. So my liability account will also be 50,000. So the entry will be very simple in this case. As usual, let me remove the reserve, workman compensation, reserve account, debit, that will be debited, and I also have to create a liability, isn't it? That is a claim of 50,000. So for that I have to create a claim payable account. 50,000, whatever I had in the name of reserve, will automatically go in paying the claim payable. Okay, so again, reserve nullified, here claim created. This is removal of reserve, this is creation of liability. So because I am removing a reserve, and reserve is already a credit based account, I am debiting the reserve here. And because I am creating a liability, and liability is a credit based account, I have to credit the liability here. Now let us go to the fourth scenario. The fourth scenario is where we had reserve of 50,000, but we ended up having a claim of 70,000. Let us understand. Reserve of 50,000 and a claim of 70,000. Reserve is 50,000. Claim is 70,000. Now you can see the claim amount has exceeded the reserve amount. So we were short of reserve. It doesn't matter anyway. We still have to eliminate the reserve first. So for that we have to write workman compensation reserve account debit. That will be the standard journal entry. That will be the standard first step in any journal entry. Workman compensation reserve account debit. Whatever be the reserve that you find in balance sheet, write that on the debit side. Next, you have to give a claim. You have to give a claim, workman compensation claim payable. You are creating a claim payable account or creating a liability, 70,000. Now you can see there is a mismatch in this journal entry. The journal entry hasn't tallied. Now where is the shortfall here? The shortfall is in debit side or credit side? The shortfall is in debit side. How much is the shortfall? It is 20,000. Now I anticipated a loss of 50,000 and I created a loss of 50,000 in the name of reserve. I anticipated loss in advance, and to cushion that loss I created a savings of 50,000. But how much actually did I end up having as a claim amount? I ended up having a claim amount of 70,000. So beyond my expectation, how much extra loss did I suffer? The extra loss I suffered is rupees 20,000. Now this 20,000, for accounting this 20,000, to account it as my loss, I have to recognize this 20,000 now. I anticipated a loss of 50 and I provided only for 50,000, but my current claim came up to be 70,000. So that extra 20,000 loss, now I need a ledger to put that amount as loss. That ledger is revaluation account. You cannot use profit and loss account for that. So to the home for that loss is revaluation account. And we said that revaluation account, whenever the entry is favorable, like it is a gain to the firm, then it should be debited. And if the situation is unfavorable for the firm, the revaluation ledger has to be debited. In this case, the revaluation ledger has been debited because the firm is facing a loss situation, extra loss situation. So revaluation account has been debited. So this is fourth scenario. And last scenario is where the reserve amount is nil. I did not create one rupee of reserve also, but I ended up having a claim of, let us say, 20,000 or 10,000, whatever it is. I created a claim of 20,000. In this situation, I cannot use this previous entry as it is, or whatever that I was using previously as it is, because in all the four scenarios I had a pre-existing reserve in my ledger. Therefore I was debiting workman compensation reserve in all four journal entries, because this problem itself had a balance sheet amount of 50,000 reserve. So I was able to happily debit the reserve in every scenarios in all the previous 4 scenarios. But in this scenario, as per our assumption, we have said that the balance sheet does not contain any reserve. So because of that, we cannot debit workman compensation reserve. So even if you debit that, what amount will you fill it? So there is no reserve, right? So there is nothing to be demolished. So don't bring workman compensation reserve. Instead, you have to give a claim of 20,000 to the laborers. So workman claim payable account. You create a claim payable account and you write that amount of 20,000. The liability goes first. You created a liability of 20,000 first. But to hold this credit of 20,000, there has to be another debit of 20,000, isn't it? So that 20,000 is a loss for me, isn't it? So who will bear that loss? You guessed it right. It will be borne by revaluation account. When nobody is there to bear a loss in admission or retirement, the rescuer is always revaluation account. So these are the 5 journal entries that we have come across in this in today's lecture. So I hope you have taken notes of this so far. First 5 scenarios. We have come to the next segment of the video, which is the ledger posting and balance sheet disclosure. This is the last segment of today's video. First, let us see the ledger posting for the first scenario. Scenario number 1, reserve amount 50,000, claim amount 0 rupees. What was the journal entry? Workman compensation reserve account debit to partners capital account. So whenever you open the problem, you will have a partners capital account, A's capital account, and then B's capital account. Look only at the credit side of partners capital account. This is partners capital account. So the first scenario, you will have by workman compensation reserve account 25,000. So this is how the first ledger posting will be. Partners capital account by workman compensation reserve. Whatever you have credited to them in the journal entry, you would credit to them in the ledger also. Fill the amount first and then write the text afterwards. By workman compensation reserve account. For want of space, I have written just the abbreviations. You don't do that in the exam. Write the full ledger name itself. So whenever you create ledger, plan the space accordingly. So this is first scenario, ledger posting. And how does the balance sheet look in that scenario? In that scenario, the balance sheet part, you should account only the claim payable on the liability side. Workman claim payable. So the ledger portion will generally come only when money has been transferred to partners capital, because ledger wise, what will you prepare? You are not required to prepare workman reserve ledger. You are required to prepare partners capital account. So in this situation, you will have something to post in the ledger account. And then you are not also going to prepare workman claim payable. Nobody is asking you to prepare workman's ledger claim payable. So again, you don't have to prepare, you don't have to write these 2 accounts, but then you have to write this account. But in every scenario, whenever there is workman claim payable, whenever there is a liability, in balance sheet, you have to write that amount on the liabilities column. So for second scenario, first scenario, no amount will be there. No amount will be there in balance sheet, first scenario, because we did not have any claim in this question itself, isn't it? We don't have claim at all in this scenario. Second scenario, when we write balance sheet, we have to write workman claim payable. You have to write 10,000 on the liability side. Don't write it on the asset side. It is a liability. So liability side, workman claim payable. For third scenario, you will write 50,000 here. For fourth scenario, you will write 70,000 here. That's how balance sheet will be accounted for all these questions. And what do we do for the ledger posting of the other scenarios? In the first situation, we saw here partners capital 25,000, 25,000. This is the first situation. Similarly, for the subsequent all situations, let us see how it is to be written. Only in the first and second scenario, money has been gone to partners capital account. So in the second scenario, like how we wrote 25,000, we will write by workman compensation reserve account just 20,000. Whatever you have written in the journal, that only will come here in the ledger 20,000, 20,000. In third scenario, you see workman compensation reserve account to claim payable account. So these two ledgers we are not preparing. So no ledger posting will come, but this will come to balance sheet. This will go to balance sheet. Which side? Liability side. Okay. And then finally you have fourth and fifth scenario. For fourth and fifth scenario, you will have to write it in revaluation account. When you prepare revaluation account, you have to write this. Let's say this is your revaluation account. You should always find the debit side, okay? Because it's an unfavorable item. So find the debit side. Whatever be the amount you have written here, revaluation account here. So you would write it on the debit side of revaluation account. And whatever the ledger that is to the opposite of revaluation account, see the opposite account, which is workman claim payable. Don't write workman reserve here. So you have to write workman claim payable account here on the debit side. To workman claim payable 20,000. And similarly for this scenario also you will do the same account posting. You will go to the debit side and you will write to workman claim payable account. Amount you have to see whatever be the amount that is against revaluation account, and account, the text that you have called for, that will be the opposite side, whatever that is in the opposite side. So these are the ledger postings and balance sheet posting for all the scenarios that we come across today. Like I said, let me quickly recall the total number of ledgers that we have come across in this entire list of journal entries is only 4. Workman compensation reserve account, and then there is a claim payable liability account. Then there are partners capital accounts. So here we saw in today's question A's capital and B's capital. Depending upon the name of the partners that are asked in the question, you will just fill the partner's name in that capital account. That is there. And then we also we saw this revaluation account. Revaluation account is a credit based account. In workman compensation scenario, it will take the debit side. I hope this lecture was useful to you. Regarding workman compensation reserve with respect to dissolution chapter, I will make a separate video. So let me know in the comment section, what did you like about this video? Where can we improve? If you still have any doubts, you can also let me know that in the comment section. I will see you in the next video. Thank you and bye bye.